All right, cool. So today's video, I want to wrap everything from the top down. I want to do everything from the beginning when it comes to top-down analysis, knowing where we are. What are we buying or are we selling at a higher low, lower high? Do we have a shift to structure and then entry signal, right? And I'm just gonna do it with let's see, should I do it with a pair that has had a trade, or should we do it with a pair that can potentially have a trade, or let's do it with a pair that has already had the trade and we saw it play out perfectly. Sound fair enough? That sound good? So you get the full rundown, because this trade right here is exactly what I explained in the strategy. And if you guys notice what I explained in the strategy, we at least have one pair every single week move how we want it with the strategy. Notice what I said there. At least one pair out of all of these pairs move with the strategy once a week. Yes, we can predict that gold was going to have this pullback to this area of interest. That's not part of the strategy. That's just us wanting the trade to go here. And then we also predicted that if price doesn't break and retest under here, that price was going to have the push up, right? That's not part of the strategy. What I mean is a trade like, let's say, AUD CAD from the strategy has the actual move. Then we have Euro JPY. The strategy has the actual move. Euro GBP, the strategy, it has the actual move. You guys are seeing what I mean by that example, right? At least once a week, we have one pair that moves with the strategy. All you simply have to do is do the proper top-down analysis on every single one of these pairs and find everything we're about to go into, right? You guys are with me? Type 1 if everything looks clear. If you guys have any questions, so we can get it now. All right. Perfect. Everybody's putting 1. No questions. We're all good. Okay, perfect. Okay, cool. So let's do Euro JPY, because this is obviously the one that we did together. We saw it play out, so on and so forth, right? So let's delete everything. What I mean by everything, I mean this. I find myself doing everything, but I see everyone in the chat taking trades. I feel like if I'm doing something wrong. So like the same way how you can apply this strategy, you can apply it to the lower time frames. So that's kind of what maybe the guys are doing. Like people are going to trade no matter what. It just goes back to the risk tolerance, and that's exactly what I'm going to basically do today. And then there's more people that are more aggressive and people that are less aggressive. I personally, myself, I feel like I am the least aggressive trader ever, because like I don't feel the need to be involved. Like I don't have to trade, right? Like I only trade if it makes sense. So Euro JPY. So first things first, delete all of that. Gone. Let's do it again. Confluences to go long. First things first. Weekly. Are we bullish? Are we bearish? Obviously, let's pretend like this bullish candle is in here. So are we bullish or are we bearish on the weekly? Okay. Yep. Again, we're gonna wrap everything up and do it one go right now. So you guys see how simple it is. If anything, we can time it, right? Let's say we started at 6:10. You guys just see how fast it is. We can do it in 2-3 minutes, right? I mean, it's gonna take a little bit longer simply because I'm gonna draw everything out so everybody understands. So we take it step by step. There's no cutting corners. So this would be the higher low. This would be the higher high. The moment we body closed above here, now this turns the higher high. And then the last structure point turns to the higher low, whether we decide it's going to be this one or be this one, doesn't matter. The weekly is bullish. You guys are with me on that? Simple, easy. Then we go down to the daily. Daily time frame, we do the same exact thing. As you can see, the daily was creating higher low, and then we have a higher high, body stick candle closed above, making this the higher high, then this the higher low, and then the body closed under. Exactly what I say. At the moment we body close under, this now goes bearish. What a coincidence. Like, you guys are seeing how it's not a coincidence that the moment we close under this line, price has a minor retracement and then drops. It's not a coincidence. It's because the market structure is now bearish. You guys are seeing the beauty of that, right? Like, there's no EMA, it's literally just market structure telling you, right? So now we know that this is the low, and then this eventually became the lower high, and then this became the lower low. So we understand the daily. So the weekly is bullish. Daily bullish. Now we go to the 4-hour. The 4-hour is at the moment bearish. As you can see, this is the lower high, and then this is the lower low. You guys are seeing that? Very simple, clean, right? Like, there's no need to go on 25 explanations on why. It's very straight to the point. That's how it's supposed to be. 4-hour is bearish. So after here, we have a mandatory reset to the higher time frame as the week. Yeah, good. Yeah, the daily is bearish. Daily is bearish. So then here we have a mandatory reset to the weekly time frame. We need to understand what is the weekly time frame doing. So as you can tell, we are creating a weekly higher low, higher high, higher low. As you can tell in the weekly time frame, we are not at this point right here. We are not at this point right here. We are at this point right here where we can have the next push to the upside. So even though we're not buying at a weekly area of interest because there's nothing clean we could identify, we're at 3 because 1 is at the top, 2 is on the way. So let's just show this on the chart really fast. 1 is here, meaning we're at a higher high on the weekly. But let's put here 1. 2 is we are on our way to our area of interest. So we are nowhere near what we're looking to buy yet. So this is what would be 2. And then 3 would be once we are at our area of interest, that it is resistance now used as support, or it is at a point where it can create a potential higher low. We all understand that. We understand the difference between 1, 2, and 3. Type 1 if it makes sense. Okay, perfect. Perfect. Okay, just again, just want to recap everything just so we're moving forward. Everything we're going over is it's already like, like we're building a house. It's already a concrete, it's already placed, set in stone, and we move on to the next block, right? So we understand weekly we are at 3, meaning we're at a point where we can create a higher high. Simple. Now, after we identify that, we go back down to the daily. Daily, same thing. Where are we? As you can tell, we are at a area of interest. Simple. This is where we come here, same exact thing with 3. 4 doesn't matter because remember, any time frame from 4 down is simply just 4 entries. So we're gonna put this here. Side note, we only buy at weekly or daily area of interest. Anything from the 4-hour down for entries. It's really that simple. You guys get this little side note, right? We're only by the weekly or daily area of interest. Anything from the 4-hour down is just 4 entries. So now that we understand where we are in the daily and we are here, we need to buy at a higher low. So after we understand that we are rejecting a daily area of interest, we're rejecting a weekly structure point. So we'll go ahead and type that up. What are we doing on the weekly? So after we identify everything, we come right back to the weekly. Weekly is weekly retesting previous structure point. That's all we have on the weekly. There's nothing else we can type up. We are not rejecting. So let's do this. Let's do this. Let's do this. So it's even simpler. Watch. This is a side note. So we'll do another side note. So this is side note. Side note numbers 1 through 4. I mean 2 through 4. 2 through 5. Right? So if you are not rejecting a structure point, watch, I'm gonna make this so easy. Structure points, EMA, area of interest, or that's it. These are the only 4 things we can identify to type in for number 2. We are either rejecting a structure point, we're rejecting the EMA, we're rejecting an area of interest, a round psychological level, or we have a weekly rejection candle. You guys are seeing how now your mind can't go and then create a confluence to type here. Like for number 2, you only have to select one of these 4. Does that make sense? I feel like this is super gangster. I should have done this shit like forever ago. But like you get me, like I learn as I go. Because this is good. This is literally like if you're gonna go to a quiz right now and it says select an answer, you just select one and then obviously you read the question, which one makes the most sense. You just click it. It's not like the one, oh, type an answer. There you can go crazy and you can completely like get that shit wrong. So when you reset back to the weekly time frame to see where we are, what are we doing, you only have to type one of these 5 right here. You're either rejecting a structure point, you're rejecting an EMA, you're rejecting an area of interest, a round psychological level, or you have a weekly rejection candlestick. Very clear, simple. Type one if that makes sense. This is fire. Okay, simple. All right, so for here, this is all we have. All we have is a weekly rejection from the structure point. You want me to repeat? Okay, so after we analyze that we are a weekly time frame is bullish, daily time frame is bearish, 4-hour time frame is bearish, you need to mandatory reset on the weekly time frame, come back to the higher time frame and start typing up your confluences. What's next? What comes after this? What are we doing on the weekly? Are you rejecting our support level? Like what the hell are we doing? For example, let's say if we were to type it up here, we have a high, this right here, we can type up weekly bullish rejection candlestick, because you can see right here, this is our only option of what we can fill in. This is our trading plan. We're just filling it in with what's right here. Does that make it more clear, Elijah? Yes? Okay, perfect. But they are not the same percentages. Correct, John. Correct. And I can go as far as doing that right now. But what if we are bullish and what if we are bullish in the daily and the 4-hour, but bearish in the weekly? That's fine. That's what you identify these for. We can go on some examples on that now. So this is what we have for 2, right? There's nothing else you can type up on 2. All right, cool. You simply now go to the daily. I mean, there's nothing else you can type up on the weekly. You can't type up, because look, it's very simple. After you selected this one, can you select any one of these right here? Is it rejecting an EMA? No. Okay, next. Is it rejecting an area of interest on the weekly? No. Okay, next. Is it rejecting around psychological level? Yes, but this is like a daily psychological level, so we'll save that for then. So technically, no. Do we have a weekly rejection candlestick? No. All right, cool. We're done on the weekly time frame. Now we go to the daily. You guys are seeing how simple that is, right? You guys are seeing how we just made that multiple choice, fill it in, whatever makes the most sense, right? So the same thing applies for the daily time frame. So this is for, let's make it for 2 and 3 weekly time frame. Yes, rejection candlestick can mean doji, anything. Yeah, but this rejection like is, look where price is right here. If you notice, when we go down to the daily, we are not there. You're seeing, right? Because it's kind of trading views like a little like glitched out or whatever, but it's not supposed to look like that. But yeah, it's just because trading view glitches out. So this is a side note for the weekly, and then it's going to be the exact same side note for the daily time frame. Daily time frame, and the numbers can go from 3 to 5. You guys are seeing that, right? Very simple, clean. So now we'll go to the daily time frame. What can we type up from the daily time frame? This is all like, we're not making anything up. We're just all we have to do is pick one of these. What do we have on the daily time frame? Just type it up. What do we have? Okay. Okay. Perfect. Okay, so we have a daily rejection candle. As you can see, it's right here. So this one is already checked off. Bet. All right, what's next? Do we have anything else? Well, we have a round psychological level. So we have rejection from daily round psych level. All right, cool. So this is now checked off. Oh wait, it was like this. And then it was like this. Okay, what else? We have rejection from daily area of interest. Now we got this one checked off. There's no rejection from an EMA. As you can see, the EMA is up here. And we're technically rejecting a structure point, but it's not the previous structure point. It's just our area of interest. You guys are seeing how all of that clean, perfect. We just checked everything off. These two other ones, they don't apply in this example. You guys are seeing that, right? Type one of it if it makes sense. Perfect. So when it comes to the structure point, like if you notice here on the weekly, it's retesting. For example, this is what I mean when you're retesting the last structure point. When it comes like this and it retests the last structure point. This is literally the last structure point. The last structure point. The last structure point. But if this has an area of interest here, and there's like whatever, like resistance throughout here, and you obviously mark it off as a level of resistance, it's not, oh, I mean right here. It's not retesting the last structure point. It's, you get me? It's just retesting this resistance here. Does that make sense? When I mean retesting structure point, I mean that it's retesting the last structure point. If you notice, this is the last structure point. If you notice right here, when this does a high, retesting the last structure point. This retested the last structure point, but then it kept going down. So here for daily time frame, it's not retesting the last structure point. This would have been the last structure point or whatever. Is that clear? We can move on. Okay, perfect. So this is a side note. We only buy at a weekly or daily area of interest. Side note for the numbers 2 to 3 on the weekly time frame. If we're not rejecting from any one of these, like this is our category to select in here. Same thing for the daily time frame. So now that we've understood this from the daily time frame, now we mandatory need to buy at a 4-hour higher low or potential higher low at the shift of structure with a engulfing interest. Okay, this is literally it, guys. This is literally the whole entire strategy in these 5 boxes right here. You guys are going to see how simple it gets. With the side notes, it makes a lot more sense. I agree. My bad. You know, now I know. Now at this point, I just do this and that's it. You know, fuck. You know, trust me, I wish I would have done this at the beginning. It's a lot easier to understand it like this. But you know, like I don't know why. You know, I mean, I don't know. All right, so this is where after we identify everything. So as of right now, we've checked both of these boxes off. Now we're on to our next box. These side notes are next level. Yeah, they're very simple. I just did this in like 2 seconds. I'm telling you, it's very simple because like when I say it, I'm talking a lot of shit. So you guys can probably get confused and like the words get lost. But when I type it up, it's literally like right there. So now we are done with this box, right? So now we go on to our next box. You guys get that? You guys are with me on that? Type 1 if it makes sense. Perfect. Okay, cool. Okay. So now this is where we're going to go down to, hold on, let's do this. See, bro, I'm getting more creative with this shit. Box 1. So we know this is 1, 2, 3. There's impossible to like get lost. Box 2. Box 3, right? So now we're on box 3. Yeah, step 1, 2, and 3. That's literally it. There's 3 steps to it. So now we go down to the 4-hour. So now on the 4-hour, we need whatever it says right here. We need a higher low to buy. We need to buy at a higher low on the 4-hour or potential higher low on the shift structure. So now this is just for sells. We need the mandatory need so at a 4-hour lower high or potential lower high at the shift of structure with a engulfing at resistance / support. So this is the same exact thing, just bearish, right? You guys are seeing what I did there. Like this is obviously if we're having a higher low, and then this is if we're having a lower high, right? Simple. I just did that to kind of have that advance. Do you always buy after a higher low on the 4-hour or not? Do you always buy after? I don't get what you mean. By that prep. All right, cool. So as of right now, for number 6, waiting for higher low or potential higher low. Does that make any sense? What number 6 is? Is it clear? Type 1. Type 1. Okay, perfect. So now the ideal trade setup here is waiting for this to come here and go like this, or have this come here and then do this, because then this 4-hour will shift bullish. So this 4-hour will then be bullish, giving us a 20% confluence here, because then we have the weekly and then the 4-hour bullish, right? This is the ideal trade setup. But if you notice, we can take a trade at a potential higher low. What is a potential higher low? Exactly what would happen here. This comes into this area, which is again the round psychological 13800 daily area of interest, and it They has to create this fluctuation in order to have the push out. This just can't get out of here for no reason. Like it needs to have this retracement to have the push to then do this. You get me? But again, this is something that you will learn on your own as you continue to trade. I'm setting the wave, setting the example of how it has to happen in order for it to happen. And like I explained to you guys, I personally myself, I would have gotten in right here if I was actively watching the market. But like you guys said, the 4 hours still bearish. Yes, I agree. But then keep in mind, in order for this to have a higher high, like it's got to create the higher low before. You guys listen to what I said. Like in order for this to have the higher high, it has to create a higher low. So this is where I would have gotten in. But again, it comes with a little bit more experience. You guys will get it over time. But for this example, we're going to keep it strictly to the strategy, exactly what we've been waiting for. Like I can go on the example where I would have gotten in right here. So if you notice, if we go down to the 30-minute time frame, we would have waited for the shift of the structure to go bullish right here, bullish engulfing on the 30-minute, bullish engulfing on the 1 hour, bullish engulfing on the 2 hour, Morningstar bullish engulfing on the 4 hour. This is your trade right here, where your stop loss under the zone. So this is 52 pips, add 5, so like 57. I would have probably done 60 pips. And then my take profit is my daily structure point, but we'll get to that very soon. But for this example, we'll keep it to exactly what we were waiting for. We're waiting for a higher low. Let's not put potential. You'll know your own higher low soon, right? You guys are with me so far? I just kind of went like on a little rant there, but we're still waiting for the same thing. You guys are with me? Just type 1 if you guys are with me. Okay, so as of right now, we're still waiting for a higher low. Why? Because what do we have? We have a higher high. After this higher high, we now need a higher low. Again, we don't know when this push is going to stop. It could stop here, 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 or it can legit never stop. It can do exactly what it did here. Here, when we broke above this structure point, we wanted a higher low to go long. Never happened. It just kept going. It's not our trade. Literally, there's nothing we can do. There's no strategy that I know how to trade to catch this move. So we're going to stick to what we know and is waiting for a higher low. So let's just keep it going. Oh shit. This looks like it can start the higher low move. This is where we go down to the 30-minute time frame or 1 hour time frame or whatever, right? So after I'm getting crazy with these boxes. So this is mono. How do you spell like moderating? Moderating, whatever. Let's see if I spelled it so wrong. Siri can't even fix it. Moderating. All right, we're in constant mod. Thank you guys. We're in constant moderating of the 15-minute of the 15 and 30 and 1 hour shift of structure to continue with the higher to continue. Continue with the higher time frames. All right, does this make any sense? Is it clear? Is it not what I've been saying for 2 weeks, but now it's simple because it literally tells you, like, it's everything I've been saying for 2 weeks, but now it's just a step. Like, you got to do, like, there's levels to this shit. So now this is the next level. So now that we have a higher low, what do we have to do? we are starting to create, after we are starting to create a potential higher low, lower high, we are in constant moderation of 15-minute, 30-minute, 1 hour shift of structure to continue with the higher time frame. Which time frame is the correct one, you may ask? Whichever one makes the most sense and looks the cleanest. There's no right or wrong answer. There is no magic time frame. There is no nothing. It's just the one that I'm gonna get this as a poster. Yes, to whichever one makes the most sense and looks the cleanest. For my personal self, I like the 30-minute. There's times where it's the 1 hour. There's times where it's the 15-minute. But it's really, you only got to pick from 3. That's really it. Like there's more. There's the 5-minute, 3-minute, 1 minute, 30 second, all this crazy shit. All you got to do is pick from these 3. I've shortened it down to that. You just pick whichever one makes the most sense. Simple, right? Is this clear? Does this make sense? Just, you guys notice how easier it gets. Bro, why did I not think of this from the beginning, man? This is crazy. These boxes are like helping a lot. Like this is crazy. So now what do we do? What do we do now in step 4? Exactly what it says right here, right? If we're waiting for a higher low, now we are after recreating a potential higher low, lower high, we're in constant moderating the 15, 30-minute, 1 hour time frame. So that's exactly what we're gonna go do. We're gonna go down to the 30 time frame and we're gonna monitor when it's gonna go from bearish to bullish. So that's exactly what we're here for. As you guys can see, as of right now, whatever, we are creating a lower low. So we'll mark this as a lower high right here. And then we will mark this as a lower low. Why is there a gap? I have no idea. Probably like these replay things. Just, I'm telling you, the replay thing is just out of whack. That's why I don't like backtesting. Like I just don't like it. So here you have this. Oh, what do we do now? Oh, Cameron is like, oh shit. Mandy was like, oh, the time is here. All right, so what do we have? The strategy. It's here. So now comes the final step, the moment we have all been waiting for. Final step, which is 5. Final step 5, yeah, right? Okay. So once we get the shift of structure on 15-minute, 30-minute, 1 hour, looks cleaner. We now look for an engulfing. What the hell, man? My spelling. Look for an engulfing on the 1 hour, 2 hour, 4 hour, whichever looks the cleanest. And cool. Does this make sense? Is this simple? So after we get the shift of structure on the 15-minute, 30-minute, 1 hour, whichever one looks cleaner, we now look for an engulfing on the 1 hour, 2 hour, or 4 hour. So if you noticed, we looked for the shift of structure here. And now we look for the entries here. And we're buying at these time frames. It's very simple. You guys have seen how each time frame has a purpose and how we go back and forth. I swear. best. Yeah, literally. If I ever do another boot camp, like this is just like this is it. Like this is literally it. So after we now do the shift of structure, then we're gonna look for an engulfing on the 1 hour, 2 hour, 4 hour, wherever it looks cleaner. Obviously, the strongest confirmation, the higher the time frame, the stronger the confirmation. Simple. You guys have any questions? Type 1 if you get if we're all good. Can you put the steps right next to each other so I take a picture? Yeah, I got you. No worries. Like at the end, I'm gonna do everything. You'll see. And I'm gonna make this dope. I'm gonna make this better for like the future. Right? So as of right now, we have the shift to structure. So now we go to whatever it says right here. This is literally the strategy. So we're just gonna follow this. Now this says go to the 1 hour, 2 hour, 4 hour, whichever looks cleaner. Okay, that's exactly what I'm gonna do. As you can tell, here, technically, obviously, this is why I hate the back testing, because that's not where it is. You notice price is down here. It's not up there or whatever, right? So technically, we would have an engulfing here on the 1 hour. Then we would have a bullish pin bar on the 2 hour, and then the 4 hour, we would have a 4 hour pin bar. So exactly what I just said, we type up. So right here, waiting for higher low. So this is where we go to number 4 and we go 30-minute shift of structure. Then we go to number 7, which is our after the shift of structure. What comes next, which is the final step? It is our entry signal. So here you put entry signal confirmation. After the shift of structure, our entry signal confirmation is 1 hour bullish engulfing. Oh my God, there's too many buffs. All right, so we have entry signal confirmation, 1 hour bullish engulfing, 2 hour bullish doji, 4 hour doji. Right? Again, this is just everything this market is telling me. You guys are seeing that? You guys are seeing how all of that makes sense? That like type 1 if it makes sense. Type if you guys have any questions. Perfect. Okay, cool. That's it. You just set and forget. That's literally it. That's the whole entire strategy. Like it really does not get any simpler. So now it just comes more of like tedious work, which is like yeah, exactly. All you would bet here is just 2%. All of this is just 2%. So then this is where we just come to tedious, where not tedious. Okay, okay. We're gonna add another step. Add another step. We're getting better at this. Side note. So this is a side note. Side note for stop loss / take profit placement. Stop loss. At a point where if it stop loss has to be placed at, okay, let me see how I explain this. Stop loss has to be placed at completely wrong, or also at the shift of structure 15 30 1 hour with a 5 to 7 pip breathing room. All right, does this make sense? This is a side note for the stop loss. So when it comes to placing a stop loss, the stop loss has to be placed at a point where if hit, we are completely wrong. Also, at the bottom or at the top at the shift of structure. So for this example right here, we're going to go down to the 30 time frame, the 30-minute time frame. That's when we had the shift of structure. So if we were to take this trade right here, and then this were to be our trade, if this were to be the bottom of the move, 50, whatever, you add 5 pips. That is the bottom of the shift of structure. Meaning if price hits this point, we have now body closed under, where it's going to potentially create now a lower low. Does this make sense for the stop loss? We give it a 5 or 7 minute breathing room. And then this is done on the 15-30 minute whenever we get the shift of structure. Does this make sense? Very self-explanatory. Type 1 if it makes sense. This is crazy fire. Yeah, I'm telling you, this is even fire for myself, because I feel like now I'm just going to save so much time on explaining things for you guys. Like, it's fire. Could have made, yeah. Okay, perfect. So now this is where we come again for the side note. Side note for stop loss placement. So let's just do, this is going to be its own side note. Stop loss for sides. And then we're going to have stop loss, side note for take profit placement. Side note first. Okay. Side note for take profit placement. Buying at daily higher low. If buying at, we'll start from the top. Buying at weekly area of interest and aiming for weekly higher low. Is placed at, let me see how I explain this. Let me see. If buying at weekly area of interest and aiming for a weekly higher low. So what do I mean by that? If level the fuck up. So if we are buying at a weekly area of interest, this is weekly area of interest, and we are aiming for a weekly higher high, aiming for a weekly higher high. Stop loss is to be placed at, take profit 1 is to be placed at previous higher high. So if you are buying here, if you are buying here on the weekly, this is your stop loss, your take profit 1 is at the previous higher high. Does that make sense? Is that simple? Do you guys have any questions on this? Is this how it should be explained, or take profit 1 is to be placed at higher high? I don't think it's previous higher high. It's just at higher high. Structure point. Bodies. So again, this is telling you right here, if buying at weekly area of interest, your take profit is at the weekly. This is a side note. And again, same thing for here. If buying at a daily area of interest and aiming for a daily higher high, take profit is to be at the structure point. Does that make sense? Simple? Not really, Jonathan. Not really, not at all. Is this simple? Does this make any sense? Perfect. So for this example right here, what are we doing? We are rejecting daily area of interest. If you notice, we are buying at a daily area of interest. So buying at a daily area of interest, buying at a daily area of interest. Holy shit. That means I must set my take profit at a daily area of interest. Holy shit. This is giving me so much anxiety. We're going to fix it now. So then this right here, we would place it at our daily structure point, which would be this point right here. You guys are seeing how that makes sense? You guys are seeing how that's simple? And then what you do after that, you take it, you just set and forget, and then boom, your shit gets hit. It's literally that simple. Do you guys have any questions as of right now with everything we have done here? I'm going to put everything here right now for you guys, so you guys have screenshots of everything, because this is the whole entire strategy right here. Like, this is everything we've explained in the past 30 days in one simple screenshot. All right, hold on. Let me just make it clean for you guys. Hold on. Hold on, let me make it clean. All you have to do is just print this out and have it next to your desk on a sticky note, whatever you want. It's all you need. Okay, so this would be, and I'm going to have the chart here, so it's an example of what can happen when you have a trade like this. This would be step 1. This would be step 2. This would be step 3. This would be step 4. This would be step 5. And then everything from here is just side notes. Side notes. There has to be another side note. There it is. And then this is a side note. So this is a side note for stop loss. This is a side note for take profit. Side note. We only buy. So let's do this right here. Let's do this right here. I'm going to take a screenshot for my damn self. So this, go ahead, take a screenshot, do whatever you got to do with it. But this is exactly, wow, I've gotten better. I really have. It's crazy. I'm telling you, I like before I get on the Zoom, like I'm like, all right, how do I make this shit easier? Like I have to brainstorm, you know? Okay, so this is it. Let's just recap everything one more time, right? We are only going to buy at a weekly or daily area of interest. Anything from the forward down is just for entries. As you can tell, when it comes to stop loss and take profit placement, we'll cover that when the time comes for that, right? Step 1, when we type our weekly time frame, we need to either be rejecting one of these points right here. Step 2, when we are going to type up things for confluences on the daily time frame, we need to type up whatever's here. After we understand where we are in the daily time frame, then we need to mandatory buy at a higher low or sell at a lower high, right? And then this is where we'll wait for the shift of structure. As we're waiting for this higher low or lower high, we then need to be constantly moderating the 15-minute, 30-minute, or 1 hour for the shift of structure to continue with the higher time frames. As you can tell, we waited for the shift of structure here to go bullish to continue with our weekly time frame and buying at a daily area of interest. Which time frames are the correct ones to look at? Whichever ones look the cleanest, whichever one makes the most sense. After that, once we get the shift of structure, whether it's on the 15, 30-minute, 1 hour, we now look for an engulfing on the 1 hour, 2 hour, 4 hour, whichever looks the cleanest and has the strongest confirmation. The higher the time frame, the stronger the confirmation. So if you get an engulfing on the 4 hour, it's obviously stronger than the 2 hour. But if you get an engulfing on the 4 hour, you're going to get an engulfing on the 2 hour, 1 hour, because they will all go at the same time by then. You know, it's very simple. When it comes to placing your stop loss, you need to place your stop loss where if it gets hit, you are completely wrong. Also known as the bottom of the shift of structure on the 15-minute, which is step 4. So once you have the shift of the structure, place your stop loss under it, give it some breathing room. When it comes to your take profit, literally place it at the weekly high or the daily high, depends where you're buying. I'm telling you, you just copy and paste this, and then there's just no questions to be asked. You literally just type your confluence up, and then there it is. I feel like my mission here is accomplished. I genuinely feel good. Thank you. Zoom, this man was applauding. Thank you, man. Thank you. So can I explain how I have multiple take profits? Do you place 3, 4 separate trades? Do you have separate So for this type of trading strategy, I only have one take profit, and it's just here, and I close there or I get stopped out. That's really it. Now, what I'm kind of doing now, I have multiple take profits, and they're really not multiple take profits. They're just like whenever I'm at a 1-to-1 risk to reward. So let's say right here, and this is just more for like the signals. The reason why I have multiple take profits is because everybody has a different risk tolerance, and then not a lot of people will hold all the way, and they just like, there's people literally in the Signal group that they only like, every single trade they take, they close at a 1-to-1, or they close at a 1-to-2, or they'll close at a 1-to-3, whatever. You get me? Like the Signal room it's just like, it's a wild place, right? Like everybody that goes in there has their own type of trading. But for me, the way I'm teaching you guys and the way to that, how I got where I am today is with this style. This is more kind of to just give people signals, and they kind of don't want to learn how to trade. They just want to copy and paste. And I'm telling you, there's people that have a certain approach. They're like, bro, if I just copy his signals, the majority of the time they hit a 1-to-1, just, making a couple cents. The majority of the time they hit a 1-to-2, but not everybody will hold to the final take profit. So that's what I have. When it comes to the signals, that's what the multiple take profits are, just so that people know, like, yo, we're here. If you want, you get out, or you could keep going. It's literally what it is. And then, yeah, all the take profits are placed at each risk to reward. So if take profit 3 is hit, it's because we're up a 1-to-3 risk to reward. It's not like a made up number. People would like make up random numbers, which makes no sense to me. Okay, let me just read some questions. Yes, Jonathan, because we already rejected our area of interest. Thank you, Max. Thank you, man. Thank you, Jeremy. How would I go about multiple entries? I just do one entry. I don't like, I hate scaling in, honestly, because that's where you get wicked out. Because if you're scaling in, now you're buying here. Now you're buying here, and then you're literally breaking rule number 1. You only buy at weekly or daily areas of interest. It's literally that simple. That's why I hate scaling in. Like even now, like I'm drifting or whatever, I just don't. Do you leave trades open overnight? Yeah, like I take my trade and I put my take profit on whenever it gets there. Bro, this trade got here very fast. 1, 2, 3, 4 days. They're telling me you can't hold a trade for 4 days for a 1-to-6 risk to reward. Come on, very simple. Okay, stop loss box. When do you place it below? Damn, Pratt, don't understand that one, man. I just don't. Like, when do you place it below? Damn, yeah, man, I don't get it, man. Just want to say I'm truly grateful. No, appreciate you, Nacio. What percentages do I put aside for taxes? I mean, bro, like taxes is just different for everybody. Like it's a lot. Like it's a lot, no cap. Like it really is a lot. It's kind of why we have to buy all this shit. Like we have to buy the car, we have to buy all this annoying stuff, because it's just, just spend the money. It's like a loss. It's depreciation. That's why Raul gets 25 cars, because it's a write-off. All the depreciation is a write-off. When will you give your trade a second chance if stop losses hit? Great question, Daniel. Great question. So I was asked when do I give my trade a second chance if my stop loss is hit? So let's zoom in right here, because this is where my stop loss would get hit, right? So let's say this trade right here, presumably, or however you say that word, let's say it goes from here, that it goes bullish. It creates a higher high. We take our trade, but then it comes and it hits stop loss straight away. Cool. I'm waiting for the same thing. I need to wait for the 30-minute time frame shift. When this shifts to bullish again, I do the same thing. I'll take the trade here, and now I have my stop loss here. I have to wait for the shift of structure again. That's it. Because it happens. Like this can literally stop me out. Like it can do this. It can do this right here. It can come down a little bit lower, and then here it shifts to bullish. And now this is where I take my trade right here. So I just have to say that. I just want to say thank you for truly her answer. Thank you, Mandy. Thank you, thank you, thank you, thank you, thank you. Do you ever get out early if you see that it's reversing on you until you get stopped out or break even? So for kind of positions like this one, where I'll place my take, like that's why like I don't want to place my take profit at the wick, because if you place it at the wick, like it's so exact, like it's kind of scary, like it's literally like to the T. I want to place the take profit to the bodies. So I feel like the bodies is enough. Like I'm not like stretching it out to the max. Like I'm reaching it to the point where I think it's fair. So for example, let's say that I was buying right here. Let's say whatever I was buying at this point right here. My take profit's going to be the daily structure point. I'm getting out at the bodies right here. So I don't care that it went this little extra push, which if you do the math, like it could add up to like a whole other 1 or 2%. But no, I get out at the bodies. You forgot how I separate my 30-30. So it's a 30-30-30-10 rule. But that's just something completely aside from this. What do you have to pay? Yes, correct, Max. Yes. Can you explain the times that you take trades from 3 to 5 a.m. or 9 to 11? So with this approach, like exactly what I'm teaching you guys here. Let me just kind of organize everything again. So everything that I teach you guys here, it's literally to be done on any time frame outside of Sydney and Tokyo. So you could take the trade pre-London, during London, pre-New York, during New York. And that's it. Because you're giving your trade enough room to breathe. You get me? Like this is the type of strategy you could take at any of those times. So like, for example, right now, I won't take a trade right now at all, but I'll take a trade at 12 p.m. EST. It's like 2-3 hours before London, which is fine. You get me? Just I will only take it if I have this, my entry signal. As soon as your strategy is met and you're kind of like a couple hours off from the session, you take the trade. You know, there's no like, oh, I have to wait for it to hit. Not really, you know. I hope it does, Jeremy. I really hope it does. I really, trust me, I genuinely really hope it does. Do you guys have any questions? Yes, Max. Yes, Max. Do you guys have any questions? Anything? I'm telling you, this has probably been like, but not probably, this has like been the best boot camp I have ever done. Like, you know, you guys have gotten the first of it. With these boxes right here, the next boot camp is just going to be even easier. I probably won't even do a month ever again. I'll probably just do like 2 weeks. You know, just kind of explain it box by box. So, you know, you guys are witnesses. You guys are just been, but like the thing that I like about the 30 days is like, bro, we literally like, come on, like we saw this whole move together. We called this whole move together. We saw this whole move together. We called this whole move together. We saw this pullback together. And we like, you get what I mean? Like, it's just different 30 days. You get me? It's a lot more work on me, but whatever, I'm out for it. So like, it's just kind of like you know, what I look forward to. So, I mean, definitely this is my best one. I think my next one will be my best one. Yeah, you know, at this point, it's just watch them back every single video, every single week. If you guys notice, maybe you guys are going to notice now, this is all I talk about every single week. This is week 1. This is week 2. And then this is week 3 with week 4. That's literally it. And even in those weeks, it was still, you know, like it takes some time because we got to go from showing you guys examples on a chart like this to then actually going on a candlestick. Like it's like, oh, it's a whole mission. But yeah, this is everything I've been teaching you for the past 4 weeks. I can't believe, yeah, I know I can guarantee you nobody's teaching this for a fact. Nobody has this on YouTube. Maybe there's somebody out there teaching like this, but I don't know. But like the way that I'm doing it, nobody else is doing it. So yeah, again, take a screenshot if you guys haven't already. This I'm gonna put like a little star on the Telegram as the last recording, and I'm gonna make everything look nice now because all I have is the Telegram for the recordings. But I'm gonna make a website where specifically from you guys. I think I might be switching over from Discord to like a different server, like something completely different, which like a lot more like professional. And then yeah, you guys again, I highly recommend you guys still get on your Zoom calls weekly. I try to jump in once a week. I'll drop a Zoom and then like, you know, try to like just I'll do like a Sunday swings randomly with you guys. Kind of like pave the road, like, oh guys, this week, this is my top 4. You guys got it from here. Like I'm giving you guys kind of like where the fish where like the fishing spots are. And then, you know, you figure out how to anchor there, you figure out how to put on your own bait, how to do all that stuff. But I'm kind of telling you where the fish have a high probability of being. But I'm crazy with these analogies, man. I don't have to be a poet or whatever analogy people do. Fire. Yes, Joseph, yes. Fire. Let me just stop this recording. This doesn't get too long.